Hey, welcome to Life Insurance Secrets Revealed, hosted by myself, Javaughn Spencer, Verified Advisor. This is where I go over what your life insurance agent may not want you to know about. I want to go over all the secrets and everything I learned in the industry for going over 8 years now. Let's jump in. First, the topic today is life insurance with living benefits. A lot of folks might have not heard about life insurance with living benefits. You usually hear about life insurance with living benefits if you want additional protection, except for a death benefit, right? We all know that life insurance is when you die, but they now have life insurance with living benefits that's available to protect you while you're alive. This also gives you money if you become ill, have cancer, heart attack, stroke, disability. This pays that policy up front instead of only the policies that pay you when your eyes close. It's becoming really popular. It kind of seems a little taboo, but this is really what life insurance was made for. And insurance companies are getting wiser because they know that the chances of someone only needing life insurance when they die is slim to none. Like, we know that there's other reasons that we need life insurance, and they enhance their products, and a lot of agents may not have access to it, but it is out there. First, let me start off explaining who I am. This is my family, Bridget and Javaughn Spencer. We're verified advisors. We have 2 sons, Brendan and Darian, and we live in Beaufort, South Carolina. I'm also licensed in 48 states. Here's my national producer number. My wife and I, we actually own our insurance brokerage. What does that mean? That means we represent multiple life insurance companies all across the country. We help people, and we really want to make sure that the public is very well aware of what options are available to them, especially if you live like in a small town or you're just not really versed on life insurance. We want to make sure that you are educated and know what's available to protect you and your family. Here's just a glimpse of the carriers that we have partnered with to do this. That's our website, my email, my contact info. That's truly my direct number if you need to get in touch with us for any reason. Let's start from the top. Like, there are 2 main types of life insurance. I'm going to start on the left side. I know on social media here, don't do this, don't do that. This is good, this is bad. Guys, every type of life insurance policy has a place. Being a broker, I'm not partial to anyone because I personally own both of them. It's all about what you need it for. Let's start on the term side. The term will not pay a death benefit if you live longer than the selected term. For example, if you purchased a 15-year policy and it says that it's going to have those premiums locked in for 15 years, if you stop paying that policy when it's done with, and that policy's done in the 16th year, if you stop paying it and you pass away, that policy is no longer active. Now, you hear some things that has term up to age 95. That's true. They have policies that have you to age 95. The biggest secret is that the payments that you're agreeing to stop at that 15-year mark. So you can have a term policy that is figure $50 a month for 15 years, and at the top of that policy it says life insurance to age 95. After that 15th year, those payments shoot through the roof, and it's designed for you to cancel that policy. So do you really have life insurance to age 95 if that's what you were sold or positioned? No, it's designed for you to have those payments locked in for that selected amount of term and then get something different or renew out of it. You typically see term when you have a particular product in mind, like your mortgage. You typically see a lot of term on mortgage wrapped with mortgages because that's a 30-year mortgage. So you typically see 30-year terms or 25 or 15-year or 20-year terms. The term lasts that set period. So you see terms that have 10 years, 15 years, 20 years, 25, 30. I have some products that have a 40-year term. That's the set period that the monthly payments will be locked in. Term is less expensive Absolutely. Term is cheaper than permanent. Why? Because the insurance company is actually giving you, like, they know that the product is going to end. So they're insuring you from 30 to 45 years old. Well, the statistics show that, ailments might come later in life. They're betting on you that you're not going to die within those 15 years. And that's the price you're paying. Term is less expensive also because it does not build a cash value. The straight term products do not build a cash value, so you're getting strictly a death benefit. You will not qualify for term if you have certain health conditions. That's the kicker. Term, you have to be fairly healthy. And I say fairly because there are some insurance companies that came out with loose guidelines for insuring people with term, but for the most part, you're going to have a pretty good bill of health for term. Some carriers offer living benefits with terms. You're going to see at the end of this video webinar that you have chronic, critical, and terminal illness options depending on which carriers are out there, and I'll break down what those mean. One good analogy that I've heard for term is when you go on vacation, do you carry only one pair of shoes? And I was like, no. She said, exactly. Term is like taking your sandals to the beach. You know you're going to use it to go to the beach and that's that, but you're not going to use that insurance. You're not going to use that product for the rest of your life, unless you just know you're going to die within that period. Term is great when you have an asset that you're protecting. Term is great if financially it's tough right now, that you need to put some insurance in place, and then you have a few years to go ahead and transfer and convert it to permanent. Term is awesome for those things. I love it. I have it on myself. I have term because I have a mortgage. My mortgage has 20 years remaining on it. I have a term policy that has enough death benefit to where if I die, my mortgage is paid off. I have no problem when the mortgage is paid off, the term will end. Some people like to feel or believe that, oh, that's a waste of money. It's not a waste of money if you outlive it. It's just grateful that you didn't die. Term has its place, and it's a really, really good place because not everyone's in a position to have a big policy or have a big payment. Right now, we're seeing insurance companies have $2 million death benefits available for term, and that's with no medical exam. You have a lot of term carriers out there that can get all of your information, your driver's record, your medical prescription history, and your MIB and your prescription history, and can make a decision on term products right now, which is awesome. Get you covered even quicker. Let's jump over to the permanent side of the house. Permanent, guaranteed to pay a death benefit when you die because it lasts your entire life. That's key. That is a big one. Permanent is guaranteed to pay out because it lasts your entire life. So true. They have reduced paid up policies where you pay a little bit extra to have it locked in for a certain amount of time. Most people elect to just have a life insurance payment for their entire life so that they know that the policy would be paid when they pass away. Permanent is less expensive if you lock in the price at the age you are today. Actually, that's on both of them. Term and permanent. Life insurance only gets more expensive the older you get. And the other scary part about it is that if you get a medication or you get an ailment, you might not even qualify based off of some type of medical ailment. 100% on the permanent side, as well as the term, it only gets more and more expensive the older you get. So the quicker you lock it in, the less expensive it will be for you. Permanent builds a cash value which you can access while you're alive. Yes, you can access it and use it for retirement income. You can use it to build generational wealth. You can use it if you need to not pay your premiums for a year because you had enough cash value built up in your policy. You can use it for a number of reasons, and the insurance company do not ask you questions on why you need to use it. That's one of the perks. It's your money. They let you access it how you please. Permanent is easier to qualify for with certain health conditions. Very, very true. And some carriers offer living benefits As I explained, when we get later on into the series, you have chronic illness, critical and terminal illness protection that the permanent side and the term side can protect you from. Let's customize plans. This is what I was wanting to explain and go over. What are some things that you might not know about? And I have a lot of variations. This particular customized plan is one of my most popular, and this can go for either the term side or the permanent side. So once you decide which one best suits your needs for your insurance, you decide, what do I need in my plan? How do I want to be protected? So I always start at the bottom. So at the bottom, all life insurance starts with the death benefit. And what is the death benefit? Means when you die, it pays out. Chronic illness is if you're unable to do 2 or more of your activities of daily living for 90 days or longer. So what is that? Activities of daily living, if you can't bathe yourself, dress yourself, feed yourself, hold your stool, or walk, if you can't do 2 or more of those for 90 days or longer, the insurance company knows that you're having a hard time producing income. Your income's in jeopardy, your home's in jeopardy, your livelihood is in jeopardy if you need help doing that. So they allow you to access your death benefit or a portion of your death benefit up front. Critical illness is if you had a heart attack, if you developed cancer, if you had a stroke, kidney failure, blindness is a huge one. If these things happen to you, you might not die, but your ability to create income is now in jeopardy. What does that mean? You can now access that death benefit, a portion of it up front, depending on the severity of the case. What you would do is place a claim, they would get medical records, and then they will let you know how much of your policy you'd be able to access up front. Terminal illness, this one is huge. It gets overlooked a lot, but it's huge because let's just say I'm told I have 9 months or less to live. Well, I'm still alive, bills are still due, I still have rent or mortgage, I still have to eat, I'm trying to stay alive. This allows you to access your policy up front so you can live on. I know people that went to other countries to seek treatment and ended up living longer because they had the funds to be able to pay to save their lives. It's based off a doctor's note, and the severity of it depends on how much cash you would get up front. Again, these are the living benefits. And I always bring up accidental death because we don't know how we're going to leave this earth. We don't know if it's going to be from a car accident, murder, slip and fall. Slip and fall accidents are the 4th leading cause of death. We just don't know. And I put it separate from death benefit because you can have a plan that have accidental death is typically less expensive. It's always less expensive than just traditional death benefit. If you pass away from an accident, you can get the accidental death benefit and the traditional death benefit. And it will be literally pennies on the dollar for how much. If you don't die from an accident, you will not get the accidental death benefit. You would just get the death benefit of any death. Remember, the death benefit at the bottom pays you regardless of how you pass away. So like I said, this is the most popular plan that I and this agency present. Let's go to another one. This one, as you can see, is pretty similar to the previous one. It's missing the accidental death. You might have that elsewhere. But if you notice at the top, it says return of premium. You hear the terminology, return of premium, and it says receive all premiums back if nothing is used. Return of premium is typically found on term products. The insurance companies realize that people will feel like, hey, I paid all my premiums and I didn't die. I've been paying for this insurance for 15, 20 years, 25, 30 years. I didn't die. I didn't get sick. All that money's down the drain. And all I can say is, thank God you didn't die. But the insurance companies always looking to better their service, better their products. They say, hold on. What if we gave you all of your premiums back? It's the win-win-win. If you didn't die, if you didn't get sick and needed to use your coverage, you can get your money back. That completely changed the game. Life insurance secrets revealed. Return of premium is typically more expensive than without having return of premium. But as long as you're able to afford the little bit increase on that policy, then you have nothing to worry about. You cannot access the cash that's building in it up front. Say you're paying the little bit extra on it and building up to give you your money back. So say you have a 30-year policy and you're reached year 25 and all that money start to accumulate and you're waiting to get all of your premiums back. You cannot access your premiums until the last year, to the end of it, till the policy's over. You will get a check for that for what you're owed. We have some companies that give you 100%. You have some companies that give you 75%. You have some companies that give you 50% of all your premiums back. It's all about what's comfortable for your budget. That's one protection plan that's really popular if you can afford it. This one is really, really popular. So as you see, starts at the bottom. You still have your death benefit. You still have your chronic illness, where if you're unable to do 2 or more of your activities of daily living for 90 days or longer, you can access your policy's death benefit up front. You have the critical illness, heart attack, cancer, stroke, kidney failure. You still have terminal illness. If you were diagnosed with 12 months or less to live, you can access your death benefit up front. Now we have your accidental death, but then you see accidental disability. So now you can include to where if you become disabled due to an accident, you can now elect to receive up to $1,800 a month for up to 2 years. Why 2 years? Because 2 years is typically the time frame that you will receive disability from your state. You also have the option if you had cancer. The harsh reality is that 1 in 3 men and women will develop cancer in their lifetime. With the cancer coverage on top of it, you would get a lump sum at any diagnosis. You'll get a lump sum of your cancer policy. Now you're probably saying, Spence, didn't you say the life insurance has cancer in it? Yes, the critical illness has cancer in it as well. It pays the cancer based on the severity of it. The cancer coverage that's standalone pays whatever dollar amount you select, regardless of the severity. If you got diagnosed, you get that lump sum. And then you see the top, permanent children coverage. This is the plan that's best with families when the breadwinner cannot afford to get sick, develop cancer, and they have no coverage in place for the children that they own outright. The cancer coverage is tricky because I hear a lot of people say there's no cancer in our family. I hate to tell you that someone had to be first with having cancer, and 1 in 3 men and women will develop cancer in their lifetime. It's better safe than sorry. This is a full metal jacket protection plan that even protects the children as well. Same here. This one includes the death benefit, the chronic, the critical, the terminal, accidental death, accidental disability, and the cancer coverage. Really similar to this one, minus the children. If you don't have children under 18, then we will look at this one for you and then put a plan like this. If you have children over 18, you can put a plan like this in place for the children, for your child, 18 and over. Let's look at this one. This one, I would say when I see this slide, this tells me that the person that's looking at this to have these options might have had some ailments along the way. This tells me this, the death benefit. You know, if you pass away, it pays. It has terminal illness. So this is if you had 12 months or less to live, you can access the death benefit up front. And this one has the cancer. 1 in 3 men and women will develop cancer in their lifetime. This plan does not include the critical and the chronic. This person might have already had a heart attack or cancer or stroke, had a critical or chronic illness already, that they might not qualify for that type of protection plan again. They wouldn't have had cancer already unless it was 10 years or older. So that's another insurance secret, that you can get cancer coverage again if you've been cancer-free for at least 10 years. Then you would get one of these plans. This is really popular in the final expense world, like burial, a little bit better than just the death benefit. It gives them the terminal illness and then add that extra cancer policy on top of it. And this one here is similar to that one, minus the cancer. And I would bring this one up if they've had cancer within 4 years. then they may not qualify for having the cancer plan, but you can still get the death benefit, the terminal illness, and accidental death. And I would bring this up to every senior from age 50 to 70 years old that might have had some medical issues, still might be facing some of them. You will be able to qualify for the accidental death, terminal illness, and death benefit plan. Just wanted to give you guys some variations of what that looks like. The next steps, if you would like to see and build a plan just for yourself, best thing to do is to click the link of my calendar. I will be more than happy. My team will be more than happy to help you. We just want to make sure you're up to date, up to speed on all the insurance jargon. If you have questions, you can put it in the chat. It will come to us. We will get to you. Myself, my assistant, my team, or my staff will be able to help you respond back to that. Please go to the next chapter. Got more stuff to share. Have a good one and see you on the appointment that you're booking. Have a good one. Goodbye.